Hello and welcome. If you're involved with Bitcoin or any crypto here in the UK, you know how confusing the tax side of things can be. Well, today, we're going to clear all of that up for you.
This entire discussion has been put together for you by the brilliant team at My Tax Accountant. They deal with the ins and outs of crypto tax every single day, and they wanted to help us bring some much-needed clarity to the whole subject.
So here's what we're going to cover. First, we'll talk about HMRC and how they actually see your crypto. Then, we'll dive into the two different kinds of tax you need to know about. After that, we'll get into the practical stuff, how you stay compliant, and finally, where you can turn to get some expert help if you need it.
All right, let's jump right in with the question that I'm sure is on pretty much every crypto investor's mind.
You know, there's this common myth that the crypto world is this anonymous playground, totally off limits to the taxman. But is that actually true? The short answer, it's a big yes. You see, HMRC isn't in the dark. They have data sharing programs with all the major UK exchanges. They can see your Know Your Customer or KYC information. They're even sending out what they call nudge letters directly to investors. And get this, from 2026, brand new international rules are coming in that will make this kind of data sharing mandatory. The bottom line is, you can't just fly under the radar.
Okay, so we know they're watching, but how does the tax actually work? Well, to try and make things a bit simpler, HMRC basically splits crypto tax into two main categories. And figuring out which bucket you fall into is the most important first step.
It really all boils down to this. Did you make a profit when you sold or got rid of an investment? If so, that's probably capital gains tax. Or are you actively earning new crypto from something you're doing? Well, that's going to be treated as income. This one distinction changes everything.
Let's dig into the one that affects most investors first, capital gains tax, or CGT for short. This is all about the profit you make when your investments go up in value.
Now, disposal, that's the magic word from HMRC, and you really need to understand what it means. It's not just about selling your crypto for pounds. Oh, no. Traded your Bitcoin for some Ethereum? That's a disposal. Used some crypto to buy a coffee? Yep, that's a disposal too. Even gifting it to someone, unless it's your spouse or civil partner, can trigger a tax event. It's way broader than most people think.
But here is some good news. Everybody gets a tax-free allowance each year. For the 2024 to 2025 tax year, that allowance is £3,000. That means you only start paying tax on profits above that amount.
And how much tax do you pay? Well, the rate depends on your total income for the year. If you're a basic rate taxpayer, you'll pay 10% on your crypto gains. But if your total income pushes you into the higher or additional rate tax bands, that rate for crypto jumps up to 20%.
This is so important, and it's probably the single biggest mistake investors make. They think, I haven't cashed out to pounds, so I'm fine. But that's not how HMRC sees it. When you swap one coin for another, they see it as you selling the first coin, and that right there is a taxable event.
All right, let's flip to the other side of the coin now, income tax. This is what kicks in when you're not just buying and holding, but you're actually earning crypto.
So, what kind of things are we talking about? Well, if you're mining or staking your coins to earn rewards, or maybe you get an airdrop, HMRC sees all of that as income. They look at the value in pounds on the exact day you received the crypto, and that value gets added to all your other income for the year.
And because it's treated as income, it's subject to the exact same tax bands as your salary from work. It all just gets lumped into the same pot and taxed at your normal rate, whether that's 20, 40, or even 45%.
There is another little allowance that might come in handy here. It's called the miscellaneous income allowance, and it lets you earn up to £1,000 from casual earnings, which can include small-scale crypto activities completely tax-free. So, we know the rules now. But knowing them and actually staying compliant are two different things, and compliance really comes down to good habits and knowing your deadlines.
I can't stress this enough. The responsibility for keeping records is on you. You absolutely cannot rely on an exchange to keep your data forever. You need to be tracking every single transaction, the type of crypto, the date, whether you bought or sold, the value in pounds, everything.
And here are those all-important dates for your calendar. Remember, the UK tax year runs from April 6th to April 5th the following year. The big one for most people is January 31st. That's your deadline to get your online tax return filed and pay whatever you owe from the previous tax year.
Look, for a lot of people, especially if you're making lots of trades or getting into more complex areas like DeFi or NFTs, trying to figure this all out on your own can be a real headache.
And sometimes getting professional help is simply the smartest thing to do.
If you're feeling a bit lost or you just want that peace of mind knowing everything's been done correctly, the specialists at My Tax Accountant are there to help. This is what they do, day in, day out. You can get in touch with them using the details right here on the screen. Because at the end of the day, whether you do it yourself or get some help, staying on top of your taxes is just part of being a smart, successful investor.